Hey guys, welcome back. While everyone was watching the Bitcoin's price action, something historic just happened. XRP ETFs pulled in 756 million in just 11 days. Now we've got Vanguard, the firm that has refused crypto for years, just opened the floodgates to 50 million clients. On top of that, we've got Goldman Sachs just dropped a whopping 2 billion on a crypto ETF issuer. If this isn't hype, this is the moment that Wall Street went all in. We're going to get into it. We're going to break it down. I'm going to give you guys the scoop here. 756 million. That's how much money has flooded into the XRP ETF in just 11 days. But here's what no one's telling you. This isn't about just just about XRP. This is about the moment that Wall Street stopped pretending crypto doesn't matter. Vanguard just gave 50 million people access. Goldman Sachs just dropped 2 billion. And we've got the SEC who has quietly changed one rule that's about to unleash a tsunami of altcoin ETFs. So here's the headlines that are really buzzing right now. We've got XRP ETFs that just pulled in 756 million of net inflows. They saw that across the first 11 trading days. To put that into perspective, it's about a 0.6% of XRP's entire market cap now locked in a regulated investment vehicle. And here's the kicker. December 1st alone, XRP ETF saw 89 million in single day inflows. That's absolutely crushing Bitcoin and Ethereum's ETFs on the same day. We've got the Grayscale GXRP that led the charge with 52 million, while Franklin Templeton's XRPZ and Canary Capital's XRPC followed strong. But wait, why is XRP outperforming Bitcoin's ETF? It's been around since what, January 2024? That's the question that no one's really answering correctly. The XRP ETFs are seeing conservative daily inflows 11 days straight, while Bitcoin ETFs saw 3.5 billion in outflows in November alone. That signals a fundamental shift in institutional preferences from a crypto proxy, Bitcoin, to a utility token with regulatory clarity. Now, here's where things get wild. We've got Vanguard, the company that literally banned crypto ETFs on their platform. They just reversed course completely. Starting today? Vanguard opened up access to Bitcoin, Ethereum, XRP, Solana ETFs for their 50 million plus brokerage clients. We're talking about 11 trillion in assets under management suddenly getting crypto exposure options. Why does this matter? Because Vanguard wasn't just anti-crypto, they were ideologically opposed. They represented a conservative institutional money. And the conservative money changes its mind. It's not just hype. It's because risk calculus fundamentally shift. Think about it. What changed? Regulatory clarity, ETF structure protection, and most importantly, we have clients that are in high demand. The Vanguard's reversal removes one of the last major barriers between traditional 401k, IRA portfolio, and crypto exposure. So it's not just speculation now. This is institutional legitimacy at scale. Now we've also got Goldman Sachs that just dropped $2 billion to acquire Innovator Capital Management. This is an ETF issuer with deep crypto infrastructure. This isn't just some kind of side bet. It's a strategic takeover of crypto ETF supply chain. And speaking of Wall Street going all in, now that Goldman Sachs has acquired Innovator Capital Management for 2 billion, I mean, why would one of the world's most powerful investment banks pay that much money for an ETF issuer? Because Innovator manages 28 billion in ETF assets and has the infrastructure to launch defined outcome crypto products. This isn't Goldman just dipping their toes into crypto. This is Goldman buying basically the factory that makes crypto ETFs. And here's what no one's connecting. The spot Bitcoin ETF market is projected to hit 3 trillion by 2033. Goldman's not just betting on today's market, they're positioning themselves for the next decade of crypto adoption. This acquisition gives them issuer control, fee revenue, and first mover advantage on every new altcoin ETF that launches. This is massive. Okay, so here's the regulatory shift that no one saw coming really. September 17th, 2025, the SEC approved basically the generic listing standards for commodity-based trust shares on the New York Stock Exchange, the NASDAQ, and the CBOE, right? ETF issuers no longer need to individually file for every crypto ETF. Before this rule, launching a Solana ETF or a Litecoin ETF, it required months of back and forth with the regulators. Now, if your crypto meets a commodity definition, you can list it basically within weeks. And this is why we've seen XRP, Solana, Litecoin, Hedera, the Chainlink ETFs all launch in basically like a rapid succession. The floodgates didn't just open by accident. The SEC has removed the dam. Analysts predict that over 200 crypto ETFs will launch following this standard. So we're going to continue to pay attention to that. Now, speaking of XRP ETFs, we got Grayscale's GXRP that led the pack. 67 million in first day inflows. That's because they converted an existing trust into an ETF. They had built-in demand basically already. Now, meanwhile, we have Franklin Templeton with the ZXRPZ. They pulled in 62 million. We had Bitwise with the XRPC, 5.7 million. Why does this matter? Because issuer competition drives lower fees for investors. Grayscale has historically charged premium fees, but with Bitwise, Franklin, Canary, 21 shares all fighting for a share, we're seeing expense ratios drop by 0.2, 0.3%. And here's some strategic insight into that. The winners in the crypto ETFs won't be the first movers. They'll be the firms with the deepest institutional relationships, lower cost structures. So who's actually buying these crypto ETFs? Is it retail hype? Is it institutional demand? The answer is overwhelmingly institutional for sure. 35% of institutional investors now allocate 1 to 5% AUM of digital assets. That's up from a basic 0 in 3 years ago. I mean, we've got the BlackRock's IBIT alone that holds 66 billion in Bitcoin. I mean, that's not retail, right? That's pension funds, endowments, family offices, the works. And here's why the XRP ETFs are seeing such strong flows. Institutional buyers view XRP as a regulatorily clear utility token with real-world payments and real-world use cases. It's not speculation or FOMO. It's strategic allocation to non-Bitcoin or Ethereum crypto asset. The whale accumulation numbers also back this up. We've got over 150 million XRP accumulated by large holders ever since November, which is constantly tightening the supply as the ETF demand surges, right? So, if crypto ETFs are so hot, why did the Bitcoin ETF see a 3 billion in outflows during November? Well, here's what happened. Bitcoin ETFs became a trading vehicle, not a buy and hold asset. When Bitcoin dropped from 126,000 all the way down to 84,000, leveraged investors and tactical traders sold their ETF positions to cut their losses, basically. But here's the nuance: long term institutional holders didn't sell. BlackRock's IBIT still held, I think, 66 billion in assets. The outflows were concentrated in newer speculative inflows from late October. Bitcoin ETFs passed the stress test. They experienced a 33% drawdown and didn't collapse. That's exactly what institutional investors needed to see, right? So let's talk about Ethereum. All right. December 1st, we saw Ethereum ETFs 76 million in outflows. I mean, breaking a 5-day positive streak, right? Since its launch, the Ethereum ETF assets sat around what, 20 billion compared to Bitcoin's 120 billion. Why the massive gap though? First, Bitcoin's narrative is fairly simple. Digital gold, inflation hedge, that's it. Ethereum is more like a world computer. It's pitched way harder to explain to institutions. Third, Ethereum's staking yield creates some regulatory complexity that Bitcoin doesn't have. So when you think about the Ethereum ETFs, becomes more of a proxy for crypto exposure than Bitcoin. But that positioning problem is changing now that we have XRP, Solana, and they offer clearer use cases and narratives, right? All right, I'm going to leave you guys with this really quickly. Solana ETFs, because this story is fascinating. After the launch in November, Solana ETFs saw 20 plus consecutive days of inflows, totaling over what, 570 million. And then on December 1st, they recorded one of their largest single day inflows, 13 million. But here's the thing: Solana ETFs had zero track record before October 2025. Investors piled in during the initial hype, but now we're seeing profit taking, consolidation, right? Unlike XRP's sustained 11-day streak, Solana flows were a little more volatile, reflecting retail heavy participation, right? As opposed to XRP, which has more institutional. That said, 500 million in assets under management for a brand new ETF is strong. It proves altcoin ETFs have a real demand beyond Bitcoin and Ethereum, right? Solana ETF volatility, we got big inflows and then sudden outflows. This suggests early stage price discovery and a tactical trading dominance. XRP's steadier flows indicate deeper institutional conviction. We're going to continue to follow this. I hope you guys enjoyed it. Take care.